Banks are throwing money at shareholders after passing the Fed's stress test, and that's lighting up financial stocks across the board. JP Morgan just announced a $50 billion buyback. Goldman raising dividends. So what does that mean for your portfolio? Let's find out what it means for you. Let us start with the indices. So the Nasdaq had a bit of a rough day today, down about 0.43%, closing at 25,476. And here's the thing, that's actually part of a bigger weekly slide. We're down 3.41% over the last 5 days. Tech took some heat, especially the bigger names. There's been this global rout in tech stocks that started overseas and rolled right into our market. But you know what? Some pockets of strength still showed up today. We'll get into those in a second. The weakness is real, but it's not a total washout. Now, here's where it gets interesting. The Dow actually went the other way today, up 0.35%, closing at 51,848. Week to date, it's basically flat, down just 0.29%. So we've got a divergence here. The Dow holding up better than the Nasdaq. Why? Financials. Those bank buybacks and dividend hikes are lifting the Dow-heavy names. That's a risk-on signal in some ways. Means some money's rotating out of tech and into value and finance. Not a huge divergence, but it's worth. Now here are the top movers of the day. Booking Holdings, that's the travel and hotel booking giant, is absolutely crushing it today. Up 7.29% to $181.25. And it's been solid all week too, up 3.15%. Why? Travel demand is resilient. People are still booking trips despite the market turbulence. There's also been some analyst optimism on the sector. Summer travel season is here, and booking's the main beneficiary when people hit the road and book their stays. Home Depot jumped 5.67% today to $342.86. And it's up 1.71% on the week. Housing and home improvement have been steady. We're seeing resilience in consumer spending on home projects. People are renovating, upgrading, maintaining. That's been a bright spot in retail. Home Depot benefits directly from that. And with interest rates where they are, home projects are still getting done. So that's feeding the stock today. Danaher, the conglomerate with massive exposure to life sciences and diagnostics, up 5.53%. to $188.87. Weekly gains of 4.15%. Danaher's benefited from the banking news today because a lot of their core customers, healthcare companies, research labs, are feeling more confident about capital availability now that banks are flush with buyback and dividend money. That liquidity flows through the system. Plus, healthcare spending continues to be resilient. Target is having a really strong day, up 5.29% to $141.20, and up an even bigger 5.85% for the week. The retail story is mixed right now, but Target's been executing well. You're seeing consumers spending hold up in discretionary items, especially apparel and seasonal goods. Back-to-school stuff is coming. Target's positioned well for that. Investors are rotating into retail names they trust, and Target's one of them. Thermo Fisher Scientific, a life sciences powerhouse, up 4.87% today to $492.20, up 4.14% on the week. Same story as Danaher. Healthcare and life sciences benefit from a more liquid, confident financial environment. Biotech and pharma companies have more firepower to invest in research and equipment. Thermo Fisher is the supplier to all of them. The Fed stress test passing is actually a positive for them because it means capital deployment in their customer base is likely. Now let us look at energy and fuel. Oil slipped today, down 4.56%, sitting at $69.87 a barrel. And this week's been rough for crude, down 8.13%. Demand concerns are the main culprit. You're seeing economic slowdown signals globally, especially in Asia and Europe. OPEC's been holding the line, but they can't fight demand weakness. Geopolitics are relatively quiet right now, so it's really just about people worried we might be heading into a slower growth environment. That pressure. Natural gas actually bucked the trend today, up 3.49% to $3.26. It's also up a tiny bit on the week, just 0.62%. The move today is probably weather-related. You're heading into summer, so cooling demand picks up. Storage levels matter here too. If inventories are tight, that supports prices. So while crude's getting hammered, gas is holding its own. It's a supply-demand story that's working the opposite direction right now. Moving on to metals. Gold is doing what gold does when people get nervous. People bought it. But actually, gold sold off today, down 2.75% to $4,016.40 an ounce. Week to date, that's a 7.26% drop. So here's the read on that. The dollar's been strong, and when the dollar rallies, gold gets pressured because gold priced in dollars becomes less attractive to overseas buyers. That outweighs the safe haven buying you'd normally see. The Fed stress test passing is also a signal that maybe risk-off sentiment isn't as intense. Silver got absolutely hammered today, down 7.3% to $57.49. And the weekly story is even worse, down 17.75%. That's a big move. Silver trades on both safe haven demand and industrial demand, and right now, industrial demand is what's hurting. Tech weakness means less demand for silver in semiconductors and solar. So while gold's down because of dollar strength, silver's down because the economy itself is softening. Silver's the more economically sensitive metal, and it's screaming. And finally, let's look at tomorrow. All right, here's what to watch moving forward. Tomorrow's Thursday, June 25th. No major recurring events on the calendar. So the focus is going to be on sentiment and whether the bank sector strength we saw today spreads to other parts of the market. The tech weakness is real. That global rout is something investors are processing. But financials, healthcare, and consumer discretionary are showing up. That's a rotation, not a panic. If you see that rotation broaden tomorrow, that's actually a healthy sign. Keep an eye on crude oil. If it stabilizes, that takes some pressure off the energy sector. And watch those mega-cap tech stocks. A lot of the Nasdaq's weakness is concentrated in the biggest names. So if those steadies, the index might get a bid. You've got opportunities here. Just stay patient and don't chase. Better days could absolutely be ahead. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.